Monetary Policy Committee of the Nigerian Central Bank is set for its first interest rate setting meeting in the new year, Monday and Tuesday. The meeting is expected to assess global growth prospects for the year 2022 within the context of the virus, the unwinding of stimulus by global central banks, as well as the expected fast and furious rate hikes. We're pricing in about 4 of them in the United States this year. MPC is also going to chew over Nigeria's economic development, uptick in headline inflation. We saw that in December, broke the trend of 8 months of decelerations and other considerations. So joining me now, Ayorinde Akinloye. He's an associate investment research analyst at United Capital, giving us an outlook on how the MPC should decide and what it means for the markets. Ayorinde, thank you so much for joining us. Really good to have you on the show. What's your outlook at United Capital on Nigeria's general interest rate direction in the new year 2022?
Hi, Rosus. Thank you for having me on the show. Yes. So, in terms of our expectation for the interest rate direction, for the interest rate environment, we actually expect the environment to be much more elevated this year compared to what we had in 2021. And those expectations are based on two primary factors. The first being the fact that we expect the federal government to be much more aggressive in terms of borrowing. They have an ambitious budget to finance. And there's a projection of about 10 trillion in terms of revenue. But we struggle to see the federal government achieve that revenue budget that it has, which means our budget deficit would actually be larger than what is actually being budgeted for. So we expect the federal government to be very dependent on further borrowings to be able to achieve its spending plans. And you also factor in the fact that they're not looking at accessing the international debt market. So most of the borrowings may be focused on the local market, actually. And when you put that in context, you see the fact that there will be more issuance of bills, bonds, and then you look at the fact that there's also limited maturities beyond the month of January. For the rest of the year, there's not so much sovereign maturities during the year. So there's going to be a bit of tight system liquidity and the government being aggressive in terms of borrowing. So we expect the interest rate environment to be much biased upwards this year, but we note that the CBN also has the ability to be able to deploy certain tools, in terms of trying to boost system liquidity in order to cap the magnitude of increase in interest rates. So for us, we think the direction is certain. The direction of the interest rate environment is biased upwards, but in terms of the magnitude, it's dependent on how far the CBN and the DMO are willing to allow interest rates to go.
Thank you so much for that in-depth answer there. And it's going to be interesting to see what an upward movement in yields is going to do to the stocks if investors cycle out to fixed income and money market. What are the key considerations before the MPC as they meet on Monday and Tuesday?
Okay, yes, the MPC meeting definitely is a very, very important one to watch out for. I think the first thing that we highlight is in terms of inflation numbers. So initially there was expectation that inflation would continue to decline in December and even down into the first few months of 2020 before we begin to see a resumption in the uptrend. But we had a surprise in terms of inflation numbers for December, which would definitely make the MPC committee very uncomfortable because inflation rose for the first time in about 9 months, which was not what was projected. Just to give perspective, the CBN's tolerance corridor for inflation is between 6 to 9%. So clearly, inflation is almost double what the MPC considers as appropriate for the Nigerian economy at this point. And then you look at the economy in terms of growth, which is the second thing they will be looking at. The economy is very much stable now in terms of economic growth. We expect the economy to actually grow at the fastest rate it has grown over the past about 5 or 6 years in 2021. So in terms of economic growth, there are not so much threats, that's lingering around anymore. Yes, COVID remains a concern, but clearly we are not going to be going into a lockdown to curb the spread of COVID or anything if there's another outbreak, maybe a 5th wave or a 6th wave. So clearly, in terms of economic growth, things are looking very much fair. Even if we are not going at an accelerated rate, at least things are looking much fair and the risk of recession is very low. Then the third thing that the MPC will be looking at will be policy normalization in advanced economies. So like we've already known, all through the beginning of the year, the theme of 2022 has been that of the Fed trying to and planning to increase interest rates faster than was what was even expected, along with also reducing their balance sheet size. So all these things are factors that the MPC would have to consider. The fact that the economy is in a much more stable position, inflation remains stubbornly high and is even reversing higher compared to what was initially expected. And then also you look at the external economy, basically, in terms of what is happening in the advanced economies. We are seeing possibilities of a rate hike, and that is a threat to foreign portfolio investments in terms of getting FPI flows into the country, which is another critical factor for exchange rate. So all these three key factors are what the MPC will be looking at on Monday, and we think that even though we don't see any hike in the MPR on Monday, on Tuesday, when we are getting the briefing from the CBN governor, we think the probability of a rate hike is very high at this point. But even if it doesn't happen next week, at some point by the next meeting in March, we think that probability of a rate hike in March is literally at 100% at this point in time. But for January, it's still roughly in a 50-50 position. But we think the inflation numbers for December sort of, tilts the balance more towards that possibility of the first hike coming next week.
Great stuff. Thank you, Ayorinde. Now, I want to ask, you touched on the Federal Reserve possibly hiking rates. Very briefly, if you can, how do you think the MPC should react to that when eventually that happens?
Yes, so clearly, if the Federal Reserve is looking at hiking interest rates, definitely we have to respond by also increasing interest rates on our end, because just given the situation of things right now, currently our interest, basically the entire yield curve is below inflation rate. So we have negative real return on almost virtually all our instruments for sovereign instruments, which are the instruments foreign investors would invest in. So when you compare us with other emerging economies like Egypt and with Egypt and other countries like maybe in India also, we are very much unattractive when foreign investors place us on the same scale with those other emerging economies. So if interest rates are going to be higher for example, in the US, in the UK, in the Eurozone, then what you have is these foreign investors will begin to consider your economy as riskier and pricey. If you're going to compete with the higher interest rates available in their own markets and you want to attract and keep capital flows, which we are even struggling to have right now, capital importation data that came out for the first 9 months of last year showed that capital importation continues to decline. So the MPC needs to respond by increasing interest rates in order to at least plug the gap of the negative interest rate environments that we currently have, so that we can, sort of at least keep a bit of FPI flows within the country, so that we don't get our exchange rates run over.
Ayorinde Akinloye, Associate Investment Research Analyst at United Capital. Thank you so much for the very in-depth expectations and analysis of what to expect next week at the Monetary Policy Committee meeting for Nigeria Central Bank. Appreciate your time. Thank you so much for talking to us.